You know what pisses me off is that today was like a textbook day. Today was one of those days that if I was locked in and I had my computer and I was not in a fucking assembly that lasted 2 fucking hours, I could have caught this trade. If we didn't have a fucking assembly today, I could have caught this trade. Now, let's go ahead and talk about it, okay? Let's talk about the losses. Let's talk about the mistakes. And overall, let's just talk about the trade recap, okay? Now, you might notice this is NQ. We're trading NQH, which is like the contracts. NQ and NQH basically the same. This just looks like a cleaner chart. Now, I'm going to start on NQ because this is where all the good stuff happens. NQ today was leading ES today. So NQ had the power over ES. And I realized that ES is kind of like smushed together. So like a little move on ES is actually a huge move on NQ. And so that means like a really small move for NQ would be like a tiny tick for ES. And I'll talk about that in a second. And that's kind of how it messed me up trading this morning. Okay. So let's get to when I get to school, right? It is Tuesday. Well, this is 12. So this is when the day starts. I'm on the 5 minute. Let's look at the 15 minute. This is where I just like, all right, let's go to the 1 hour. Let's just do that. On the 1 hour, and I'll talk about my morning predictions and stuff like that. Now, if you guys remember, let me pull up what I had here from yesterday. I said, expect this to be a magnet for price, which is that high up there, just it's in the standard deviation of the FOMC move. I was like, expect that to be a magnet for price to come. And then I said the bigger target would be that standard deviation leg above these highs. Now, I personally thought this was all going to get taken out today. You can see that was definitely not the move, and we'll talk about this in a second. But oh wait, no, this is NQ here. My bad. NQ here. You can see highs here and then another high. So I was expecting at least these two highs, and it was super close to that buy side liquidity up here, which is the main target. And so I was expecting this high to get ran and then this high to get ran. As you can see, we didn't get any of that whatsoever. You might think that this high actually took out this high, but it didn't, and I'll show you why. Okay, so after the 1 hour is complete, our bias was bullish, obviously. And I'm pretty sure, I don't know where I said this. Okay, yeah. This was on SPX, but basically the same thing happened on SPX. What happened, and this was on ESPX, NQ, and ES. What would happen, or what has happened, was this range was created. I created the the equilibrium, which is right here. And then price traded down into it, showed good bullish price action, came back up. Now, this is where the textbook opens, okay? Every move that I've personally seen do something like this, where it taps into a discount after market and then trades pre-market above in the premium, always, and I mean always, comes down to discount even more. It never, and I mean it never, ever uses the aftermarket move down to the discount to create a pre-market and current market or live market to go up. Vice versa. Live market and orders always need to be filled wherever that aftermarket closes down here, especially in this range like that. So knowing that, my mind told myself, oh yeah, no, we don't even need to know that. We're just going to target these highs. And I said, honestly, I can't say much more. Not really anything for the downside. Could be wrong, right? I could be wrong. And I was wrong. Ultimately, what happened was that we definitely did get some downsides. Did not sweep these lows, didn't sweep these lows, but you can see NQ definitely wanted to go lower, and we could have definitely caught it. And here's how. So if we drop down to the 15-minute, where this is mostly the low time frame analysis kind of happens for me, you can see, and if I put my ranges real quick, you can see the Asian happens right here. You have Asian lows down here. Not super, super important. They do get taken out at 6:30. Okay, that's important. And then you have the midnight open right here. And then you have the London session. So this kind of structure was kind of ideal for what was going to happen today. Basically what happened was, let me just mark out these London lows. So you have London lows down here, and then you have London or Asian lows. You have London lows that get taken out, and then you have London highs. Okay. Now, basically, London creates this range. It comes down, 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 right? We don't really care about what happens. And then we get out of London, and between London and New York, this is where the real shit happens. We take out Asian lows. We trade down. And then I'm not too sure what we hit. I'm guessing we sweep some of these near PM internal liquidity down here. We come down. We create a 5-minute buy model. This 5-minute buy model was marked, and I tagged it in ES. I said at 8:18, so this was on ES. I said, I don't want to call this out too early because I could be wrong or get fucked by the market open. And I did get fucked. But I want to see a 5-minute buy model pre-market. We have no news to accumulate for all distribution. Would like to see it move down into a range and maybe a discount array. Now, what I was thinking was, and you can see this is very early on, but ES had started to do what NQ had just started to do down here, right? And distribute up. And from the standard deviation, it looked like even on ES, so ES had already the profit targets up here. And you can see NQ profit targets were all the way up to these highs. So it's not the exact same range on NQ and ES. So ES is definitely squished down and NQ is definitely expanded in this case. Now, what ultimately happens is I see ES run up, run up, run up. This can do two things for a buy model. This can either say that the buy model is completely correct and that we got in too late. So that means that our entry could have been down here and it already ran up. And that means that it's already heading towards the profit target, which means that up here, there's not only liquidity and equal highs, but that means that there's going to be people that have longs that are going to sell up here that have their target. And the reason why it's a profit target is because of those highs up here and just the overall standard deviation. So that means that when we get to this level, everyone's going to be taking their profits, and it's also when we open market. So a lot more volume, a lot more profit taking for, overnight swing, whatever. Way more volume. Problem is, when we open and we have a model that gets created in pre-market and then we have a live market right after, expecting that pre-market buy model to hold up, that's the first mistake, right? The model should either be created literally 5 minutes before the market open and not at 7 a.m. expecting for 9:30 and 9:40 or even 10 to respect this model. And as you can see, when we go down, let me delete this for a second. Let me get rid of this. Let me get rid of the standard deviation. When we draw our standard deviation on NQ, this is NQ. And again, this was another mistake. I just didn't look at NQ at all this entire day. And the problem was because I was not on my laptop this entire day. From the entire morning. I was doing ceramics at we had an assembly first of all, so the schedule was fucked up. I think that's what really fucked me up, because what happened was we had an assembly, we had ceramics, and from 8:40 to 10-ish, 10:30, I could not have my laptop. And that's the most crucial hours. And that's where I missed basically literally everything here. Okay. Now what happens? Standard deviation on NQ, you can see that everything lines up, right? Even the profit taking is lined up with those London highs. I didn't see this, but you'd be expecting price to run up and grab the London highs. Now, what did it do and what did it didn't do, or what did it not do? Okay. It didn't sweep the London highs. Let's look if ES took out the London highs. Well, it didn't. Let's see. Yes, it did. London, you can see London highs are up here. And ES went even above and took out the magnet price for today, right? That blue line. That was the expected magnet for today. Now, like a dumb fuck, I go to the 1 hour just to really see this. Like a dumb fuck, I'm thinking, oh yeah, it just took out this 1 hour buy side magnet that was literally just right above the profit targeting profit taking standard deviation, and I'm expecting a move higher. I'm expecting a move to come down and then way higher, and that's my mistake. So it definitely sweeps London highs, comes and taps into our hourly buy side, and then what does it do? Like any other stock, it would drop. There's a lot of orders being filled. It went way above its profit target in pre-market. So ES should sell. It's textbook. Like a dumbass, what am I thinking? I'm thinking, oh yeah, I gotta wait for a buy model fair value gap. I have to wait for the OTE to get hit. I want to see the first thing to get hit. And what does my model say? It says that if price starts to drop and teleport towards our OTE or POIs, it's not good. That means that we are not getting an entry. Also, the biggest factor to knowing that you're not going to get your entry is if price trades above the profit target already. If it gets above 2.5 or 2.25, you're done. It's not even a model anymore. It's over. You either miss your entry or the model has already happened before the entry has gone. So the model is over. So the buy model and the buying should have been out of question by 9:30. That was the open. It should have been out of the question by 9:30. I shouldn't even have had the idea of buying today right after 9:30, knowing that this profit target was out. Let's go back to NQ, because imagine we're trading NQ. Like I said, if you do this range, right, of the profit target, and you say that everyone was in this buy model, everyone got their entry somewhere here, whatever, inversion fair value gap, there's definitely a lot of entries you could have taken, breaker, whatever. They're in this move up, right? Wherever their profit be, if they have this standard deviation, would be negative 1.5 and then negative 2.5, or in this range. Now, once price hits this range, it's so close to the London highs. It's so close, but it's not quite there. You do have like that low resistance liquidity up here, but I'm targeting those London highs. Doesn't quite get there, and I'm pretty sure it also trades right above the New York or the New York midnight open session. So that's where we can start selling. As you can see, we create a sell model. Now on the 5-minute, might be a little hard to miss, or wait, might be a little hard to miss. No, might be a little hard to spot, but oops. Let me go back here. What happens? I see the 1-minute. You can see this is just pure fucking annihilation. Fucking crazy. Yeah, this was like the sell model I saw. And you can see, oh wait, no. Wait, where was this? I think it was this one, no? Because it was the intermediate term. Yeah, it was. Yeah, so from this swing high here, which it looks kind of weird, and I'll explain how on the 5-minute it looks weird. I'll just put this now. See this high here? It looks weird because of that wick and then that low. But in a way, what it did was from this candle, it went like here. It created that high here. Okay. Or this high, my bad. I'm talking about this high. It created that high. And then what happened? Shoot, let me do this. It created another high up here, way higher, and then that high closed under, whatever. Now, what makes it the high is that these two highs closed under this one. That's what makes it a swing high, right? And this is where we want to draw the standard deviation, because this is where it could start the sell model, as it just began the profit target. It just hit the profit target, almost hit London lows or London highs, and it's the 9:30 open, right? So boom, high. Where's the low? Now this is really beautiful, and this is why I loved it, and this is when I realized that, I was like, holy shit, it's going down. Look at this fair value gap, and look at that wick. So I want you to notice both these are wicks actually, but these are on the exact level. This low comes into this fair value gap, trades into it, and then rejects off of it. This is what we call a intermediate term low. That is what I want to target when I draw my standard deviation. Let me extend to 0. Yeah, that's where I want to target. Okay. That's also where a market structure shift happens. As you can see on the 930, we don't get a close under on the 5 minute, but we do get a pierce. Let's go to the 1 minute though. Do we get a pierce on the 1 minute? We do. We do not. We do not. We do not, but it does get pierced through. So let's go back to the 5 minute because this is where we noticed the model happen. What do we get? And this is just beautiful. This is why I love ICT. I didn't personally know this, what's called this term until I joined a few Discords and started hearing about it more. I personally don't trade it, but I know what it looks like. The I'm pretty sure it's the IOFED, but IOED. Institutional, yeah, it's IOFED. Yeah, what am I doing? It's this. IOFED, IOFED. Institutional order flow entry drill. It's a little hard to explain, but basically it is a fair value gap that gets created in a very rapid fashion, right? This is 930 wick, shoop, fair value gap gets created. Now, the wording institutional order flow entry drill, that means that institution want to enter the market and it's a drill for them to do that. That fair value gap is used to place orders. Problem is that gap is created because those orders weren't filled, and that gap allows institutions to buy everything back up and come in into this gap, rebalance just a little bit, put it in their sell, and dump. Right? That little fair value gap right here. Okay, that's why it's called not just a regular fair value gap, but that's why it's also used in the AM session because it is most likely to be used up here. Now, what's really, really cool, and you'll notice about standard deviation, is when you draw the standard deviation leg, you can see this price, that -4 standard deviation take leg is all the way down there. You might say, okay, dude, that is impossible that we go all the way down there. And you know what's really beautiful? Is you remember that profit target that was up here where people sold? Well, guess what? People also sold when they got down here, right? When the price came all the way down here, what did people do? They started selling. They started selling the position. That's why you started seeing this start of accumulation, this sort of, we're selling, we're buying, consolidation, because everyone got out the market after the standard deviation got hit. Now, what was interesting, and personally, this is what I saw on ES, and this is what messed me up. And I'll show my executions because I'm completely honest with you guys. What I saw was a buy model. Reason why is because we had that sweep of that 30-minute fair value gap, which I don't understand how I thought of something like that. And then I saw a buy model in the 1 hour. I was like, I don't know what the fuck I was thinking, to be honest. I'll be honest with you right now. There's so many standard deviations. I don't know where we are. It was this. It was that high right here, which isn't even trading in a fair value gap. But I thought that this was a market structure shift and that this was a OTE that we could draw like this and just go like this off the top, right? And so you come down to the 5 minute and you're like, okay, there's way too much. But basically, price hits that and it comes up. Yeah, this is so messy. I don't even expect you to understand this, but ES, you can see NQ. When you compare NQ and ES, NQ definitely had a bigger move. It had way more ranges on the 5 minute. It had an entry draw. Dude, ES was 1, 2, 5 candles and we're already at the profit target. Done. ES, boom, done. Now the same market structure shift happens on ES. Only thing, it happens on the 1 minute and not the 5 minute. Look at ES. ES, the only market structure shift it has here is on the 1 minute and not the 5 minute, right? This one is all the way down here, and the only thing we get is this. That's the 5 minute market structure shift. You can tell it's not correct on ES. The only one we got on ES was on the 1 minute, and it was something super small. Super doobie small. Where was it? I'm pretty sure it was this, no? That, or, well, there is one there, yes. Or I think it was smaller. It was probably this one here. That's also a swing low here that taps into fair value. So, okay, that's one you could do, or this one is a little more aggressive. And you can see that the profit target, again, on the standard deviation lines up with that bottom. So this is just an idea of what I was thinking, right? And I saw this happen. And so what did I tell myself? Okay, well, this price can create a buy model. Let's go ahead and create a buy model, because now we want to buy everything back, right? Because we were bullish. What do? Boom. And this is ES, right? Remember, now we break above this, buy this candle, cool. Nothing too much to worry about. We take the swing low, swing high, we draw the OTE, right? It's all cool. We almost get down to it, not quite. And like a dumbass, I buy here. And the reason why, and I'll tell you exactly, and this is why I made the mistake, is before I even had this drawn out, I saw this and I was like, okay, cool. Yes, we're in a buy model. Let's go. I'm going to buy. I got out of that assembly at probably, 10:40, 10:35, actually, 10:35, something like that. By the time I had to walk out and go to the bathroom and enter this trade, I was here on this candle. I remember this exactly on this candle. I was like, okay, you know what? This buy model has already started. It already broke. What's the only fair value gap it created in this whole range on the 1 minute? It was this right here. Like a dumbass, I'm drawing this out. Where's the fair value gap's over here, bud? Why are you drawing it over here? Because I'm a fucking retard. So, like a dumbass, what do? I enter. Boom. You can see it comes down to there. It doesn't come down to consequent encroachment. I enter right at the bottom. What happens? Get fucked. I'm like, all right, cool, fine. That's definitely not expecting, because what I was expecting was if this was already in the buy model process, this would already be going up and break this high and go up. What didn't happen? Went down, consolidated. And so what did I do? I was like, let me sell this position. It's not working. Let me enter off the OT and let me enter properly. But again, I was like, there's no entry on the 1 minute model. How do you want me to enter this? Hello, wake up. If there's no fucking entry in your buy model, then don't fucking buy it. Like, how hard is that? There you go. I sell that up here. Almost break even. And then like a dumbass, I want to get in the market so bad. I want to make money so bad. I just lost. I'm trying to make my money back. Boom. I buy here like a dumbass. Comes back down. Again, this is not... where am I entering? Please tell me. This, and the reason why I'm showing this is because I want to be as transparent as possible. I want you guys to learn from me, from my mistakes, and so you don't make them, right? Because I've done them, other people have done them, but no one shares them. Look at my entry. Tell me exactly where the fuck I was buying. You might say, oh yeah, I was buying off this fair value gap right here. Fine, that's a fair point. Why was I buying at the top? No, why not the consequent encroachment? Okay. Also, yeah, the top set account kind of like you might buy down here, but your entry might be up here for some reason. That's just how top set works. They kind of want to get you fucked. But anyways, I had no reason to buy here. The buy model, the OT did not get hit. Nothing got hit. No reason to buy. I buy. Comes down, comes up, comes down. Consolidating. I buy even more up here. Reason why is it came up. I'm like, oh yeah, we're going to make money. We're breaking out. I buy one more. Look at where I bought. Look where I bought. The very fucking top. The very top. And I put my stop loss, and I had one. So at this point, I had 1 and 2 contracts. So here, I had 2 contracts like this. I had it already preset to put a stop loss. And like a dumbass, I want to buy 1 more. But like a dumbass, I had 2 already. So I buy 2 more here. And so I realized, I'm like, fuck, I just bought 4 fucking, or like in a total, I have 4 contracts right here. And price never comes back up. And we get absolutely crushed. And look, this is the automated one that gets sold right there. And that's because I lost $1,000 on the top step, and I now have like $100 to trade with on my account. And the reason why I'm trading this is and sharing this is because no one else will. right? I'm happy to share my losses because I know that you will learn from my losses and you will not make the same mistakes. When you look at my trading right here, you might just say this guy has no clue what to do, has no clue what he's doing. And to be honest, right here in this moment, you're 100% correct. I had the overall gist of a buy model, but I had no confirmation. There was no fair value gap and there was no OT that was hit. So what does that say? That means that this buy model was not a confirmed buy model. So there was absolutely zero reason to enter a trade in this buy model. Why did I enter a trade? Because I just got out of assembly. I wanted to get in the market. So I got in the market because I saw, quote unquote, a potential buy model. There you are. Let's look at NQ and let's look at its price action when I started trading on ES. Would you look at that? It was all consolidation. Do you see a buy model happen here, by the way? See this low? This is, I wish I could go back on ES, but this low here, actually, when was this? 1025. All right, let's look when that low on ES got created. 1025. Would you look at that? That is beautiful. Let's look. That low here, 1025. You understand the only buy model on NQ has to be breaking this high up here? Did it ever do that? No, it never closed above at all. That means that this NQ, that means that buying all over here, it was not realistic. And if I saw this on NQ earlier, I would have been like, it's not realistic. I would have noticed that, but I didn't. So this whole range was accumulation for NQ. After what? After it just reached its profit target of this displacement leg down, right? After this institutional order flow entry drill, after this move down, after the first wave of profit taking right here, you can see this line right here. Oh, look at this, look at this, look at this. Boom. What happens when we sweep this level? We buy up. This is the profit targeting, right? Profit taking retracement, fair value gap, sweeps that fair value gap, comes back down. Textbook, absolute textbook. Accumulates. This is where everyone starts to get out. Accumulation, accumulation. What do we get? We get accumulation highs. My bad. Highs is right up here. Whoops. Accumulation highs. And then we get that manipulation right there. Manipulation right above those highs. We get every single one that was short here. Or long. Wait. No, everyone that was short here. So all their sell stops would be up here. We come up, we grab that, hit that 1 minute fair value gap, and we completely dump. We distribute again. Now, where do we distribute to? Well, good thing you asked. -4 would be your target. And look at that. We don't even close under it. We don't close under it. And there's nothing there. That's it. That's the whole day. The whole day was literally just textbook. And listen, you'll have people. I'm trying to make it as simple as possible, but I was only able to do this, like this chart, when I was on my computer at home right now on my PC with my fucking monitor. I probably would be never able to do this in class, trading in class, live, in the bathroom, on my phone. It's too small. I don't have a big screen. I don't see what's going on. And the only, like, what I see on my phone is this, basically. This is what I see on my phone, right? Just try to imagine this. This is what I'm seeing. Can I see all of this over here? Like, I gotta picture it. But if I just go like this on my computer, what happens? I can see everything. I could just be like, oh yeah, this is clearly this. It's clearly hitting this level. I can't do that. I don't have the freedom of seeing everything. So that's that. Another kind of mistake was the what's called the wrong analysis, right? Yes, I had this buy model. As you can see, I didn't call it out. I said, oh, this buy model got executed during market open. Why did I not, get out of it? Or why didn't I just not take it? NQ, you can see, didn't say anything. my analysis was kind of right. I mean, it did hit that high. And then what? What was I expecting after it hit that high? What was the bias after? Sure, it went up here, but then guess what? It has to come down to a discount to go higher. So what did it do? Came down to the discount. So that's about it. That's all really I have for you for this trade breakdown. I'm definitely going to take some notes on this, but again, take a picture of this. This is what's literally just a full, absolute like textbook play. Everything in here I understood. I just didn't see it on time. That's literally how I would explain it. But from the top to the low, every single price action was understood. Mistakes happened on ES because I wasn't following NQ's chart. That's it. That's it. Peace.